Hello, everybody. Welcome to Wednesday. The S&P 500 was up a little bit more than 0.4% today, really less than a percent away from the all-time high. I mentioned yesterday it's important to kind of break through that high, stay above that for a little while to kind of reassert our upward trend and not just be a head fake, sort of a double top where you get there and then fall back down. I think it's pretty unlikely that we fall back down. The momentum is really strong, and there's a lot of reasons that it's strong too. So it's not just money coming in that might leave, that type of thing. So today there were a couple of catalysts. Number one, the minutes for the Fed meeting, the last Fed meeting came out, and there was quite a bit of discussion about the possibility, especially amongst several of the Fed governors, the possibility of lowering rates in July. And so that actually came up when Powell came out and did his Q&A. He's talked about, hey, the data kind of shows that we could do it now, and they didn't. And of course, the market, reacted fairly negatively to that, and we ended up with that, 8.5% downturn because we had some other weak data that came out. Since then, we've had some better, stronger data, and we kind of keep getting this back and forth data, which is what you would have in a soft landing scenario. Whether we stay here or not, we'll have to see. But we continue to have, this soft landing scenario in front of us, and has been happening for quite some time. So, and so that was exciting, I think, to the market. It moved up pretty well for that. And then also, they put out this job report every month. We talk about it on our show. It comes out on Fridays, and how many jobs were created. And so they basically go back through, and they're still gathering data. So, and they actually don't even know, for quite a while, basically a year after this happens, before they have a real final number. So they have a preliminary final number that they talked about today, and it is less jobs than what was reported. So there's 2.9 million jobs reported as created for the 12 months that ended this March. So again, it's kind of dated, but this is how it works. And they're saying about $818,000 less jobs were created, so a little bit more than 2 million jobs, which is actually still quite robust. It's not a bad number whatsoever, but it's showing that maybe there was some slowing that's been going on, that's maybe a little bit more exaggerated than what was expected. Of course, that just boosts the concept of having a rate cut in September, definitely. And still 175,000 jobs a month. So hopefully that keeps the recession people, at bay, because that's still enough jobs to, to say that we're not having a recession anytime soon. So anyway, that's what's going on today. Not bad. I think the news was not as important today as just the momentum. I think the market is just kind of marching along, very strong momentum. Really, if you look back to October 27th of last year, when, this kind of bottom hit and then we took off in November, we've been going straight up. If you look at the weekly data, we've only had two dips, in April and now here in August, and both of them have had V recoveries. We're not through with this one yet completely, but it's looking like it might be another one. That's very unusual. And again, it just shows how strong the market is. So look forward to seeing what's going to happen tomorrow. Maybe we'll get into a new high. Again, we're not very far from it whatsoever. Oftentimes does take a couple of knocks against it before that happens. But again, this market's so strong, it could happen tomorrow or the next day. Who knows? So anyway, look forward to seeing you tomorrow. We'll talk to you then. Thank you.